Hey guys, Alchemist here. I hope you all had an incredible week. Today's video will be another trade breakdown on AUD USD, a short that was in the London session of Wednesday the 11th of January that's just passed. And before we get into that, I just wanted to let everyone know that I have released a video this week that's just passed about the new Discord only membership. And I will leave a link above to that if you haven't yet seen it and if you are interested. All the details are explained thoroughly in the video, but essentially it's only $10 a week to get started, and it will include all of my outlooks for the Asian and London sessions, all of my trade breakdowns of the trades that I personally take, a live Q&A session for you to participate in, as well as end of day markups. And as the group continues to grow, the earlier you get in, the better, because there'll be less people asking questions. So you'll get more one-on-one time with me in that 1 hour that we'll have scheduled. So if you are interested, I will leave a link above here. Otherwise, let's get straight into today's video. So as always, we're going to start off with a blank weekly chart. And you should know by now, if you've seen any of my videos, the only two objectives we have on the weekly are to identify our most recent weekly demand and supply levels. So this here is the weekly demand that we've been tapping into. If we are to make a higher high above here, this itself is going to become the new demand zone, but currently we're tapping into this one over here. In terms of our supply, it's still the same range just because we haven't yet had a body close above. So we need to see that candle closing with a body above to signify that that supply has actually failed. So currently, because this trade was on Wednesday, this hadn't yet closed above, and we didn't yet know if this supply was to fail. The next target, if this does fail, will be this unmitigated range of this supply zone here. And if you look at this, right, so we don't map premium and discount on the weekly, but essentially we could look at this because of price's fractal nature. We can look at this here as one bearish leg down, and that we essentially had a break of structure here on the weekly. Then this zone is a very nice supply zone within premium. And if it fails to hold, we'll be wondering if this high is also going to fail. But we won't know that until this closes above, and depending on how we react when we arrive at this zone. So that's yet to be seen. Potentially in this coming week, we'll actually know if this supply is going to fail or if it's going to hold to set another lower low. But yeah, that's yet to be seen. So we are going to remain consistent. The only things we need are our current supply zone. So this one's not the current one, and our current demand zone. So they are now done. In terms of the daily, if you've watched last week's video, we hadn't had a body close above this high at the time. So this was still the daily high. However, now we have had a body close above. Therefore, this here is our daily high. Our daily boss. And remember, with the daily and the 4 hour, we only need to see one candle closing above, not two. The two candles is only a requirement for the 15-minute time frame. And of course, the lowest point below our break of structure line is going to be our daily low. And our daily high will only be set after we have a bearish pullback of over 110 pips. So we can see here there's only 90 pips, so we haven't yet set our daily high. So that's all that we can do on the daily time frame, and we'll go down to the 4 hour. In terms of our 4 hour boss was this one here. Because we did actually have, it was from here. We did actually have this body close above. So this was our 4 hour boss. So it's our 4 hour and daily boss. So we'll just mark it together. There we go. And I will delete the other one. Beautiful. So the lowest point is also going to be where the daily low is. So it's daily plus 4 hour low. And our and our 4 hour high can be set because here we have perfectly a 90 pip pullback. It's very satisfying seeing this number, knowing that that's actually the requirement that we need, and it's exactly what it's given. So again, guys, I haven't pulled these numbers out of nowhere. They've come from hundreds of hours worth of backtesting. So this here is our 4H high. Therefore, our 4H range is from here to here. Now, in terms of POIs, again, they're the same ones from last video. Going to be this is a demand. This one here is a demand as well, which is currently still holding, hasn't yet closed below the body. We have swept below it. That had interacted with this as a supply. Which was also part of a supply chain all the way from this extreme. And then we have the newly formed supply wick above here. Okay. Now this demand, again, is just mitigated this demand, which was from a whole demand chain all the way down to the extreme. Okay. You can watch the other video to see all the POIs, but essentially each one of these has a series of mitigations. And this is the first demand zone that we have within discount. So if we have a look here, our daily is bullish. Our 4 hour is also bullish. And we're yet to see what our 15-minute structure and 15-minute order flow is. So currently, once we've had this body close above on the 4 hour and we've got a new boss here, and we've set our 4 hour high, the expectation is that price should retrace to a efficiently priced zone, so a zone within discount to take longs, and then give us another break above to continue the 4 hour trend of staying bullish. We're not yet sure if that's going to occur. The high can definitely just fail. It doesn't necessarily have to come all the way down to discount. This may be a sufficient enough pullback, but given how corrective this move was and how aggressive this move was, I am expecting that the 4 hour high is going to fail again. So on the 4 hour, that's all that we needed to do. So let's have a look at the 15-minute. Now on the 15-minute, the current boss at the time was from here to here. So here we had one candle closing below. The following candle, however, closed back above. Then this one was with a wick. We don't need them to be 2 consecutive body closes below. We just need to see 2 body closes below in total from the original 15-minute low. And this was the 15-minute low after it gave us a bullish pullback of greater than 22 pips. And then the 15-minute low became our 15-minute boss when we had 2 body closes below. So at this point here, when this bearish candle closed below, this here became our 15-minute boss. We have a very similar situation with our 15-minute high as well. So from here, obviously the high is just going to be the highest point above the break of structure line. And if we scroll to the right, we can see here that this candle closed below, and I can show you here. So the high of this candle was 69222, and the high of this candle was high of the close, sorry, not the high. We're interested in the close. The close was 193 because we're interested to see if it closed above, not just the wick. So the close was 193 and the high of this candle was 194. So 0.1 pips away, but that's how meticulous we need to be. If it hasn't closed above with a body, it doesn't count. So this was a sweep, right? And you can see there's a slight gap there as I pull it up. And then the next candle here did close above. However, the candles following them all closed back below. So this was not yet a 15-minute boss. This was still our 15-minute high. And our 15-minute low was down here once we had a bullish pullback greater than 22 pips. So this is our 15-minute low. So obviously we can see here that this pullback was much larger than 22 pips. Therefore, our 15-minute zone is from here to here. So let's have a look at this and let's analyze this piece of price action and find some POIs. So again, the extremes are always going to be the easiest ones to map out straight away. So this is acting as a supply. We can see here that this supply wick has swept a lot of liquidity as well and was then mitigated here. We can then take the unmitigated portion of this wick, drag it across here. Apologies. We can see that this wick here has actually swept the liquidity above all of this, which is actually what's caused this bearish pullback down to here. And then this itself is a supply zone. We've interacted, we've left an inside bar, then we've broken above. In terms of demands, we have the extreme, which was mitigated here. We can take the sell before the buy and then drag it down to the wick of the next candle, which is mitigated there, which this zone here as well has also swept liquidity. And take this wick, same sort of thing. Okay. This here has a little bit of inducement above. Okay, so there's liquidity resting below these lows. And for this supply zone here, we always need to be marking out the corresponding demand. So if we take this whole candle here, all right, this demand failed when we had one body close below. Then it's created an interaction zone. So members of the community will be familiar with what a IZ is, what an interaction zone is. And then this is the extreme of that interaction zone, making it a supply zone with interaction. And then, so this is all that we need to see here now on the 15-minute in terms of our structure. So we can come here and say that 15-minute structure is bearish. And it's always important to know if we're bullish or bearish on the different time frames and to have that overall higher time frame narrative in mind. Because I think a lot of the things that people struggle with is aligning order flow and structure. So when order flow shifts and it's against structure, we need to understand or think why that's occurring. Okay. And what we've come up with at Millennial Wealth Group is the flowcharts to tell you exactly of all the different possible combinations, what we should be doing in those instances, where we should be targeting, and where we should be taking partials as well. So it's all laid out for you. It's taken all the thinking and all the back testing out for you, so you can save literally hundreds of hours of your own time. So in terms of our 15-minute order flow, because that's the next thing we need to know, well, what do we see here? We see price coming up, making a higher high, pushing down, making a lower low within this inside bar. So inside bars are sufficient in terms of our strategy on the 15-minute to see a change of character. On the 1 minute, I do need to see a candle trading lower, but on the 15-minute, one inside bar is sufficient. And then we see a body close below the low of the inside bar. So here is where that liquidity was taken. And then we've had a body close below. So this here is our chalk down. Therefore, we've created a supply zone here. Again, I would cover the top of that wick, and then that's been mitigated here by a zone which is swap liquidity. And then we have another one here. And then in terms of demand, we have here. All right. But we do need to remember that we do have liquidity resting below this demand, and this is now an unmitigated demand below as well. So let's just keep that in mind. And the idea here was, so this here is at 6:45, the candle closed. London open is at 7, and the trade was 1 hour into London open. So if we play price ahead a couple of candles, you can see we interact above here. Okay, so if this should have been refined to these buy to sell wicks as the next mitigation from that demand, which is what price is now tapped into here. So this now is no longer a unmitigated demand. This demand has now been mitigated. This one below, if we do refine it to the section there, is yet to be mitigated, but we also know that we have a lot of resting liquidity below here. So price is now pushing above, okay, and we're now looking at this zone here. Beautiful. So once tagged into here, we can go down to the 1 minute, and we can have a look at what we've got. Now again, I'm not going to get into the liquidity models, but we do have one here. Okay. So we had liquidity resting there, and that has been taken. Then after that occurs, what are we interested in seeing? We're interested in seeing a 1 minute bearish change of character. So that is where the liquidity grab occurred. The lowest point below here is the body close that we'd need to see to confirm the chalk down. And these sell candles here are going to represent the demand that's at this higher high. So we're waiting to see if that's going to close below with a body to confirm a bearish change of character. And lo and behold, we have one here. So now let's look at this piece of price action. So when this last lower high has failed, we've left two sort of flip zones. We have the absolute last point that price failed in these buy to sell wicks. And then we have this POI here, okay, which on the seconds has actually swapped liquidity when we have this candle trading lower, then the wick trading above, and then a close below. That's not too important because we're not interested in sweeps on the seconds time frame, only on the minutes. However, what is important is this is a fully formed POI as opposed to buy to sell wicks. Buy to sell wicks are sufficient and are great on the 15 minute. Through our testing in Millennial Wealth Group, we found that buy to sell wicks on the 1 minute don't tend to hold too much. So essentially we could even be looking at this as a sort of inducement for this zone above. So once seeing this, we can do two things. We can be setting an order here, and we can be setting an order at the extreme. Again, we can take 25% of the zone. Perfect. Refine it a little bit. And what do we want to do? We want to cover the high by at least 0.3. So the high here is 148, so 151. Okay, and this is only a 1.3 pip stop loss, right? I'm not going to be entering a trade like that to try to catch 50R and risk the potential of being swept. I'm more than happy to be a bit more conservative. Run it to the entry, run it with a 2 pip stop loss. Okay, anything under 2 pips is just showing off. And then we've got here our target for 4R where we'd be taking some partials if the trade does tag us in and run to here. And now let's actually have a look at our overall positioning. So our daily is bullish. We know this. We've had a body close above. Our 4 hour is bullish, and we've had a pullback to confirm that 4 hour high, and we're in premium of 4 hour. So the expectation is that we are going to be going down to discount of the 4 hour range to have more efficiently priced orders to take longs to take out the 4 hour high. Our 15 minute is also bearish, right? So if we go back up to the 15 minute, right? 15 minute is bearish here. We've had a sweep above, right? And we want to be trading away from the sweep. Then we've had a retracement to a very nice zone, which has swept liquidity, which is also in premium, which is a great place to be taking sells. And we've then had 1 minute order flow turn into our favor. So everything here is shouting shorts. In terms of targets, once setting this higher high, we do have this target here as a demand, right? It's the next logical sort of step because it's mitigated this demand zone. However, if we do look at the flow charts, which all the members have been provided, this setup here is actually a 5-star setup. So based on where it's situated in terms of order flow and structure and overall time frame narrative, this is a very nice short to be taking. And it does actually give specific rules, which taking full TP at this demand zone would not actually suffice for. Meaning we'd be running our TP to at least 8R, okay? So essentially we can be taking it to this demand zone because this is the next unmitigated one. We could have even ran it till the low here because this is the next part here, which has a lot of liquidity resting above it. So what we'll do is we'll have our 25% partial at 4R. We'll take 65% off here and we'll have a 10% runner to the end. 10% is not really going to matter if that comes back out to break even, but it allows you to just gain a little bit more R by running your trade that bit longer. So having a look now on the 1 minute. This is that 15-minute demand, so we can expect some sort of reaction when we interact here. We're not actually tagged into the trade yet. And now we would be. Be very close there. So this here would be a loss. So what I'd actually done was ran it to here with a 2.5 pip stop loss. That was something that I forgot to do. So let's actually see, we can have that there as to that as actually what the intention was, but let's see if there was a potential for re-entry, right? So the actual idea was to play a 2.5 pip stop loss. That was my bad for forgetting because that's what we always do, playing it at the 25% of this zone. But what we can see here is we've also had another change of character. Well, not yet, but we could potentially if we close below. So once we've taken this, if we close below here, so we could be looking to take a confirmation entry. There we have a body close. And this would be the flip. So this, whether you want to say it was a loss or whether you want to say that I made a mistake on the entry and it was supposed to be 2.5, that's fine. Let's see if we do get tagged into this next one. Not 100% sure if we will. So let's not make the same mistake and let's run a 2.5 pip stop. Don't think this one's going to tag us in. That's completely fine. That's okay. So apologies for that. I will remove this one. What the idea was to play it with a 2.5 pip stop loss as per the rules. That is my bad. I have made a mistake there, but we do always run a 2.5 pip stop with our entry and place it at 25% of the zone there. So it would be tagged in here. And this would still be covering us in. We wouldn't have been swept out there so long as you've got a decent broker. The high of this candle was 160 and we got 163, so 0.3 above, which is exactly what we like to see. So in this case here, our 25% partial would be taken off there. And then this is the demand zone that we're expecting to see a reaction from. However, our 65% partial would be taken off here. So even here, we've built up some liquidity. Then we've even swapped some liquidity above here. Perfect. So then we've had 65% come off at 8.4R. 8.4. Then the last 10%, so we got 25 there and 65 there, so that's 90. And then our last 10%, as mentioned, would be to the unmitigated demand below here. So potentially after we interact here, we may have a bit of a pullback. Okay, didn't, we went straight through. Beautiful. And that would be our last target secured at 11 point. Let's run it all the way. We could even be refining that 15-minute demand. So let's have a look at it. Yeah, nice. We've got this very nice POI below. Just swap liquidity below here. So we can be targeting taking full TP at the top of this range. With the last 10%, we can afford to be a little bit more risky. With the initial 25, we always take it at 4R. And this one, we want to be a bit more conservative to make sure we get paid and we are making at least our 5R for the week that we require. And then the rest of it, we can afford to be a little bit more risky with. All right, so 10% here, that's an additional 1.24R. It's not going to change the world, but it is just nice to have an additional buffer there. So this was the full TP hit there, 12.48. Beautiful, so let me get a calculator out. So we got 65% at 8.4, which is 5.46, plus 1 for the 25% partial at 4R, which is 6.46, and then 0.1 times 12.48, 1.24 plus 6.46. Total of 7.708R in the span of 2 hours and 19 minutes, so long as you follow the rules and make sure you use a 2.5 pip stop loss easy and not a 2 pip stop loss. So that gives us 7.7R. And sorry, I forgot, it was 2 hours and 19 minutes. Beautiful. And guys, this is something that we literally just need to follow a flowchart system for. There's no discretion, right? I applied discretion here by using a 2 pip stop loss instead of 2.5, and we see what happens when we use discretion. So that's why we don't use discretion, and it was a timely reminder for myself. And perfectly timely reminder too, if that makes sense, because on Monday, starting tomorrow, I am actually going to be doing an FTMO trial. And once passing 2 of those, I'm doing a FTMO challenge. Even the trials, I will be linking my FX book to. Everyone in the community will be able to see that. I will be showing you guys on YouTube as well the trades that I'm taking on the trial, as well as the trades I'm taking on the challenge. Therefore, the challenge is going to start in about a month's time. This is now then the perfect time to get enrolled into the course. You can actually complete the majority of everything that's really required within that month if you are extremely diligent. Therefore, you could be in a position to be taking that FTMO challenge at the same time I am. We can keep each other accountable, making sure we're sticking 100% to the rules and not making silly mistakes like this. And so we can actually achieve everything that we've written out in our New Year's resolutions, everything we've been thinking about for the past 5 to 10 years, depending on how long you guys have been trying to make this trading thing work. And we can actually see some real success in our lives. So if you do have any questions, guys, please do let me know. It's the best time to get started. I will leave links below in the description to book in a call with me if you want for the next week to get things set up. Or if you just want to get started straight away, jump in and book in your one-on-one session and start the assignments. You can do that too through the link below. Otherwise, I'll be talking to you guys in next week's YouTube video.